Hey guys, how's it going? It's the Crypto Analyst here, and I hope all of you guys are having a good morning, evening, wherever you guys are from, and welcome back to another Bitcoin technical analysis. Now, if you guys remember from my last video, I talked about how Bitcoin was in the largest squeeze that it has ever been in its history, and how it was preparing for a large move. Now, in this video, I'm going to be updating our charts, updating what we think is going to happen, so if you guys are interested, go and stick around for the video, and do not forget to hit the like and subscribe button, as it does help out the channel a lot. But with that being said, let's go ahead and dive on into this. So the first thing I want to look at is the daily time scale. Now, upon our daily time scale, we have ourselves getting rejected from our overbearing resistance here. Now, this is pretty substantial because, as we talked about before, this is a pretty large form of a resistance line lasting around 9 to 10 months. So with us getting rejected from this and, essentially going into it an even further squeeze than we had already been in previously, we're seeing ourselves fall below the 50-day EMA on our daily time scale, also below our 236 fib retracement. Now, initially this wasn't too bad. This was just a little bit of a correction off of, getting rejected from our, significant line of overbearing resistance. But the problem here came when you got quadruple rejected, 1, 2, 3, 4 days in a row, all trying to break resistance and not being able to. So now we're not even touching our overbearing resistance anymore, and we're already getting rejected 4 days in a row. Now, what this does is it essentially exhausts the bulls, and you're using up all of your positive momentum to break through here, and you're not able to. So you're using a lot your first day, then your second day, and then your third day, and then your fourth day. And so what you have is you're just wearing them out. You're wearing out a lot of the positive bullish momentum and pressure that you have. You're exhausting it, and so what is likely here is, upon not only hitting resistance but now getting rejected down here, is what the most likely scenario is that you fall back down to one of these 3 underlying supports. Now, ideally, you wouldn't want to get down to these bottom 2, as it would be extremely weak. But what you could have happen over here is, hopefully, an ideal world, bounce off of this first one, keeping a higher low, and having yourselves ideally break out of this afterwards. So if you're a bull right now, short term, it's not looking too good. We'll have to see how this plays out long term. This is still, I talked about in my Patreon yesterday about how this is a no trade zone in here. Again, it's extremely risky. I know a lot of people are saying that we're just going to fly towards the upside, and other people are saying that the bulls are idiots and we're going to break down completely here, but there's definitely divergence going for both ways. Right now, in the short term, I definitely stand bearish. I think that this is a very bearish pattern, showing that bulls are exhausted and that you're going to see a little bit of downside, and you're going to come back down here and touch support. So ideally, upon something like this, you wouldn't just see yourself collapse and just free fall out of this descending triangle. At least not as of yet. I think, of course, you're going to bounce off support here and catch that, but I do believe that this is going to be the last candle that you're seeing contesting the 50-day EMA on our dailies perspective. Now, if we want to look at something else over here, we can go over to our MACD, and we're actually seeing something pretty similar of just the bulls getting exhausted. Now, you're seeing lower levels of positive momentum consistently on your MACD. Now, you saw this building saying, hey, we were getting pretty good levels over here of, getting higher levels of positive momentum coming into our market, but now you're seeing the opposite. You're starting to see, again, the bulls get exhausted. It was a great run. They've been rallying, higher lows, but now you're starting to see this all get exhausted, all get this used up. Your oscillators are showing this, because for the first time in this pattern of keeping lower levels of negative momentum and keeping the same levels of positive momentum, you're seeing that pattern actually break for the first time over here. And what you have is you have your oscillators towards the downsides start rounding off, and now even your oscillators are pointing towards the downside, with triple to quadruple bearish divergence on your MACD. And as this MACD pennant comes to a close here, it does fairly look like it's going to break out towards the downside. So it'll be unique to see how this plays out, but again, this is a pretty rare thing to happen, especially on your MACD. But with this happening, you can't really say that this is too bullish here. Again, it's looking fairly bearish. RSI saying similar things. It's looking like, you're sitting at 49 on your RSI right now. If you want to keep in the RSI pennant, you'd have to come down to around 39, 38. And really just find support down there for your RSI. But I think all of this is really pointing towards the fact that we're heading downwards, at least for a short little move here, because no matter how you draw this, you are seeing lower levels of positive momentum and just straight bullish exhaustion. Now, something I do want to pull up that's a little bit different over here, I'm going to actually exit out of this and go over to an order book. Now, this is something, if you guys are in the Discord, I was talking about this last night, because I was looking at the large scale order book, looking at, okay, well, if we do break through these resistance lines, what else do we have to look out for? Surely there must be heavy overbearing resistances besides just breaking our initial resistance. And the answer to that is really no. Once you break, and I guess this is a great thing for the bulls, but once you break your initial resistances, you pretty much have nothing to contest over here. I mean, you're looking at, 6-digit resistances, which is nothing. I mean, this is extremely weak. If you're looking at the bullish levels of support down here, you're seeing, 2-3 mil, and over here you're seeing, 473 grand, 500, 600 grand, 1 mil. Essentially the resistance, what this means in the order book is that there is significantly less resistance once you break the 7200 area, and once you break that, you're kind of on a in no man's land, really, where you have almost no resistance to blow through. Now, of course, when this happens, there's going to be resistance added, so it's not set in stone. Like, these numbers are never going to change. But this is from last night, and what this is saying is that, ideally, as of right now, if you break your overbearing resistance lines, you're kind of on a free ride up, at least for a while. Now, the resistances, I can't scroll around because this is not the live order book. This is just a picture. But of course, the resistances do grow around 10K, because that's a significant another level of both psychological and actual trading and candle resistances. But again, if you're a bull, you really like this, because I don't want to say I hate, this is what the word I've been avoiding is I hate using the word moon, but essentially if you do break these overbearing resistances, Bitcoin is going to move. And this is what we talked about of why this would be a at least $1,000 move in one direction or another, because there just is no sort of anything for Bitcoin to catch up here. I mean, it would just chew through this like it was nothing. I mean, you have single resistance lines over here that are bigger than the next 1,000, 2,000 all combined. So keep that in mind. I mean, Bitcoin right now is in a hard scenario. I've been telling my Patreons that this is a risky place to trade, and if you're trading here, one, I would probably avoid high leverage, and two, I would make sure you have a stop loss in, because it's just such a it's such a hard time to trade. With Bitcoin being in the largest squeeze that it's ever been in, it's not your ideal place to say, oh, I'm just gonna throw large amounts of money into these trades. Remember, it is in a large squeeze here, so things happen. I know a lot of good traders that have been talking about how they haven't been trading for the past 4 or 5 days because of some of these scenarios. Now, I know some people have, but generally, if you like to stay on the safe side here, you're kind of avoiding in this zone until we get some sort of better divergence. Now, again, one more thing to talk about here is the 382 being used as support for Bitcoin. We're catching it a little bit right in here. Nothing too much, because generally what you're looking at here is, you're not able to get a candle body closing underneath this. So again, contributing even more to a kind of a bearish squeeze here. You're between your 2360 and your 382, saying, hey, you're not able to close a candle body over here. We see piercing candles all the way, but with that being said, you're not closing candle bodies, which is arguably more significant than just having piercing candle bodies over there. Now, one last thing to talk about here before we go is our 4-hour charts, because it's arguably one of my favorites along with the daily. You have all three of your major major moving averages, your 200 MA, your 200 EMA, and your 50-day EMA, all getting squeezed so tight in here. And generally, again, this is not what you want to see. I mean, you've been getting squeezed with almost no volume. If you zoom out, I mean, the volume's extremely low. And so with all of these two being like $10, $20 apart, again, you can't really see this in a bullish way. You're getting this squeezed. It's a negative squeeze. It's ideally not what you want to see. It was never really even getting used as support, just consistently getting used as resistance. And now that you're under your final one, the 50-day EMA, using that as resistance now, as we can see in our latest candles. Again, looking slightly bearish for the short term. So that's going to go ahead and wrap this video up to an end, guys. I hope you guys did enjoy. I hope you guys I hope this video did help you guys out. Again, it's not legal or financial advice. This is just strictly my opinion on what I believe is going to happen in the market based upon my experience and my knowledge in the field of cryptocurrency. So if you guys did enjoy, do not forget to hit the like and subscribe button, as it does help out the channel a lot. But until next time, guys, I will see you guys in the next video.